Oh, wait.
Hello,
Okay.
everyone. Welcome to the weekly market roundup. I'm Eva Omebisi. I'm filling in for Scott. This is Ben. Hello,
Hello.
Ben.
Hey, how are
I'm
you?
the I'm great. I'm the
That's
new
good.
associate at Hart Investments, the new kid on the block.
That's it. It's
Ben,
a
I
big
can't believe
day.
it's been 2 months.
Uh, Neither can I, but you've been a huge help, so happy to have you here for sure.
Awesome. Awesome.
Yeah, yeah.
So let's delve right into it. Has there been anything this week that has grabbed your attention?
Yeah, so we had both the Bank of Canada and we had the ECB announce on interest rates this week. So Bank of
Mm.
Canada, as you know, didn't do anything, which is pretty much what we expected. So that was on Wednesday. Comments didn't change too much. Uh, Effectively, it still looks like they're going to cut rates in June, based on what they said. But the ECB was a bit of a surprise because they effectively said that inflation's slowing faster than they expected. Um, they'd already signaled they were going to cut rates, but with that, the market tended to reacted to that with bond yields going lower and prices going higher in most European bonds, France, Germany, Spain. So that was a bit of a surprise. And then today we had job numbers in the U.S. In Canada as well. But I'll comment a bit on the U.S. numbers when we do the presentation. But some pretty big revisions from the U.S. job numbers from the previous months. So we can talk about that. But yeah, jobs. So the market tended to not like that number today because we had market was kind of up and then closed down pretty much everywhere across the board, from a stock perspective.
Okay. Speaking on bonds, what are the rates now for the 1 year bond?
Yeah, so we can get GICs probably around 5.25, and you can get 1 year corporate bonds around 5.5, depending on what you're looking at. So still pretty attractive. And we haven't seen rates this good in quite some time, so still pretty good.
So did you make any adjustments in any of the holdings we had this week as well?
Yeah, so with the crypto continuing to have a good run here, I did reduce some exposure to Coinbase. So I bought Coinbase, I think started buying it around 80 and we're selling it here around 250 or so. So it's been quite successful. So I've been reducing some risk there. I still believe in the space. I still think Coinbase is a great company, but just the rally's been so dramatic short term that wanted to reduce some risk there.
Okay. Uh, so we have started to have some questions from clients about if it's a good time to convert CAD to USD. Do you have any
Mhm.
thoughts?
Yeah, so I think it's probably a reasonable time here. Canadian dollar rallied a bit with the news that no rate cuts and maybe slightly hawkish to some extent. So Canadian dollars had a pretty good run here the last little bit. So reasonable time. I know we still have clients in the US and they're thinking about their expenses. And so I think it's a pretty decent time to do some conversion now.
Okay. Great. Are you ready to go into the slides?
Sure.
Did you keep it at 3 this week?
Definitely not. No, no. I took advantage of our conversation this week, and I didn't think you'd hold me to it, so I definitely had more than three.
Okay, go ahead.
All right. Can you see that okay?
Yes, I can.
Yeah. Okay, perfect. Yeah, so this is as we look at the labor numbers, we I think on the headline perspective, it looked pretty decent, where jobs numbers in the US are a little bit better than expected, but the unemployment rate ticked up. And so if we look at this is US employment full time. If we look at this is the worst print we've seen since financial crisis, ex-COVID. So pretty bad from the perspective of full-time employment. So most of the jobs that were added were part-time jobs. So numbers, when you read below the headlines, were actually not very good. Then we look at revisions as well. So, these numbers that they put out every month are just the high levels. They're not the official numbers until the next month. So right now what we get is the revised last month's numbers. So change in non-farm payrolls, if you look here, went from 353,000, which it was last month, and the actual number is 229,000. So that's a big adjustment. And then change in private payrolls, which I think is significantly more telling for the health of the U.S. economy, went from 317,000 to 177. So it's a much better gauge for what's happening in the private sector in the U.S. And so there's significant pressure starting to kick up in there. So, when I think about the asset allocation, what we're owning, why we're owning it, so continue to have exposure to U.S. government bonds, because if things get a little bit tougher, as I expect them to do, at least near term, US dollar or US bonds tend to do well in that backdrop. And if we get a bit of a shake in the economy, I think rates ultimately head lower and maybe materially lower, depending. The pace at which some of these things that are happening are quite fast right now below the surface. And so if you watched the State of the Union last night as well, President Joe Biden spoke about how great a job they've been doing at reducing their deficit. And so U.S. fiscal deficit here, you look at 1.7 trillion, and on a go forward basis, just on what they've projected to currently spend, that's going to be 2.5 trillion annually by 2033. So that's a big number. A few more just to go through a little bit more market and bond related, just the look on concentration. And so as we've had this flow of money into passive and ETFs, you get lots of money flowing into these handful of companies. So if you look at the NASDAQ right now, NASDAQ's up a little bit year to date. 98% of that gains come from 4 companies. The rest of those companies are flat to negative year to date. So real huge concentration in these indexes. So the last time we saw this much concentration, at least in the United States, the S&P 500, was in 1964, where it was AT&T, General Motors, Exxon, IBM, and Texaco. So real big concentration. That's not typically healthy for an economy, but something I think certainly to continue to pay attention to and watch. There's 2 sides to this. You could look at it and say, okay, maybe there's some risk here, or you could look at it and say, well, maybe there's some value within these companies. And so if you look at the companies that aren't performing so far year to date, maybe there's a scenario where we get a sideways economy, and then the companies that haven't gone up with the index tend to trade back to their fair value. And if that's the case, then there'd be some individual stocks below the surface that are worth looking at. So I continue to get questions about bonds and bond yields. The starting point definitely matters. So if we look at this, when yields are more than 3.5%, the next 3 years guidance tends to be extremely positive from a rate of return perspective. So you have bonds in your portfolio with a view of where rates are going. Even if rates go sideways here, you're going to get 4 or 5% consistently for the next few years. If rates do go down, even better, you get a material pickup. And at least historically, anytime rates are above 3.5%, tends to be a great outperformance for bonds for the next couple of years after that. So we continue to follow crypto and Bitcoin within portfolios. And, what I look at, what I originally looked at it for, was to have something in a portfolio that's uncorrelated to the other assets. And as you look at this over multi-years, multi-period of time, there continues to be a significantly low correlation to other assets. And that was one of the benefits at looking at adding it to portfolios when I did 4 years ago. So 2 more quick ones. Actually, well, last quick one, excuse me. Let's pop it up here just on, oops, can you still see? Ooh, I don't know, keep getting kicked out. I guess we'll say they don't want me to show that one. So the last one was just about social media and how potentially toxic the different social media platforms are, but I'll save that for a daily next week. We can drop it into there.
Interesting slides. Just on the admin side of things, it is tax season. and I'm working through sending out all of your tax packages over the next few weeks. I'll also be booking reviews and meetings. Feel free to reach out to me directly so I can book something for you. So Ben, what lies ahead? Anything specific we're watching?
A great question. Certainly, the market turned over to the downside today, and for the people that have been following NVIDIA lost $250 billion of market cap around lunchtime today. So we'd see if there's some follow through to the downside or if it was just some profit taking. We have the U.S. Central Bank coming up with their rate announcement in 2 weeks. So we'd be watching that. I think next week will probably be relatively quiet from a data perspective. Most of the Canadian US companies have reported earnings now as well, so might have a little bit quieter period of time. And then it'll be worth seeing where rates go from now. US 10 years around 4.1, and there's a real significant level at that 4. So if we drop below there, that could tell us something else. But generally pretty quiet, looking to see what's going to happen 2 weeks from now.
Okay, yeah, good one. Any parting shots?
No, I think that's great. I mean, certainly, as you said, Eva, we've been sending out the reports, the tax packages, and meetings. So continue to do that. If there's anything specific that you need from us as well, certainly please feel free to reach out. But no, I think that's it. I hope you have a good weekend.
Great weekend and happy International Women's Day.
Okay. Yes, absolutely.
Bye, everyone.
Thanks. Take care.